I mean, the core idea, like, the way we're trying to describe it right now is like future proofing. Like just anything that could pose a risk in the future, we want to address. And so that involves like supply curve stuff. We want to future proof the supply curve against future decisions, future proof the stake. Like we just rolled out a little quantum safe multi-sig for users if they want to secure their OR assets with like a quantum resistant key pair.
Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hey guys, welcome back to another episode of the Lightspeed podcast. Today I'm joined by a one and only Hardhat Chad, self-titled here at Foreman at OR Protocol, which some of you may be familiar with. Chad, Hardhat, how are you doing?
I'm good, Danny. How are you?
Good. It's a pleasure to have you on. I think the Blockworks crew, we've been familiar and followed OR Protocol for a long time now. I know I was in those early OR trenches a few years ago, back when it was causing problems for Solana, the network.
Yeah.
And so it's interesting to kind of have followed along and seen how the protocol's evolved a little bit and how the viewpoint around maybe how it should be used or designed, or how to entice maybe demand to interact with it has changed a little bit. But it might be great to go back to some of those early days and talk through with you kind of some of the inspiration for OR and like what kicked off this idea to do like proof of work on top of like a proof of stake network, because I think that's pretty like it's interesting, and it sparked like a whole wave of people were trying to do proof of work on all of the chains at that time, and it kind of caused a lot of issues for lots of different networks.
Yeah, I think the initial V1 was kind of the starting gun for the whole IBRL movement on Solana. Because, yeah, the V1 system had, I guess you could call it like a little bug that sort of incentivized miners to spam the chain uh, as much as possible. But yeah, I mean, the original sort of origin story for OR and motivation was I was kind of between work at the time and sort of figuring out what to focus my time on. And I had been in crypto for a few years at that point, and started to like buy into the idea of like this, Bitcoin and non-fiat currency, non-fiat store value. But I was a little bit disillusioned with like the state of the network because it was just like pretty clear to me no one was using the actual Bitcoin network. Like, I don't know, 99% of the transactions were being processed and settled on sort of Binance and Coinbase and Robinhood and these financial institutions that it seemed like the blockchain was built to replace, kind of mentioned in the first line of the white paper. And, there's no DeFi for Bitcoin, obviously. And I just didn't see it really scaling self-custody, which seemed to me like, I don't know, the main point, I guess. And so my thought at the time was like, well, Solana should solve this. Like, we could just bridge Bitcoin to Solana, and then we get DeFi and we get self custody, and all this would work out. But the more I spent sort of digging into the technicals there and like getting into the weeds around how to bridge as much Bitcoin as possible to Solana, I just grew very skeptical that that was like the right long-term architecture for the industry that is going to be sustainable. Because there's essentially no way to do it without introducing some new trust assumptions. Like you kind of rely on some custodian, whether it's a single entity like Coinbase or like a network of custodians that secure a bridge. Like essentially, they're just issuing an IOU on one chain or the other, and sort of promising that there are reserves behind the IOU. And so, yeah, I don't know. During all of that research, a thought just occurred to me that like, well, Bitcoin is this computer program, and Solana is, general purpose enough that like you could probably rewrite that program as a smart contract and launch that on Solana, and then that would give you quote unquote Bitcoin on Solana. Obviously, it'd be a different token and very different sort of social network, but you would at least get this asset on Solana, like natively issued on Solana, that has very similar properties to Bitcoin, you could say, like this, fixed supply, programmatic issuance curve, um, sort of proof of work based mining mechanism. And, if it's natively issued on a chain that has DeFi and has fast transactions and cheap settlements, that maybe we could revive that original vision of like scaling self custody. Um, and so, yeah, it was just a curiosity. I kind of just filed that idea away in the back of my mind for a few months, and it kept bubbling back up. And then eventually, the Coliseum hackathon came around, and I decided to take it off the shelf and like build it kind of just for fun. I honestly didn't really expect anything to come of it. Um, I thought it was going to be people would see it and then move on with their lives. But it, yeah, really attracted a lot of attention those first few weeks, and generated a ton of network demand for Solana, and largely, I guess, yeah, due to a bug, because initially we wanted to do proof of work, like you were supposed to hear your fans spin and then like earn a token was what we thought the magic moment would be. Um, but it turned out that like the limiting factor there, the bottleneck, was just landing the transaction on chain, and so users were spending very little time actually doing proof of work on their computers, and spending a lot of time just waiting for transactions to land.
Yeah, 100%. And I think that was very much a period of relatively full Solana blocks, but also, missed or not landing transactions for other users, maybe not even participating in the OR protocol. So, yeah, a lot of downstream issues, but also just sort of like Solana network issues that were maybe fortunately, kind of in hindsight, uncovered, to be able to then kind of be worked on. Because I think prior to that point, it was probably largely maybe unknown that there were these types of problems kind of lurking there under high TX spam stress, so to speak. But maybe talk about, it'd be great if you could talk about how the vision sort of evolved based on where things went with the protocol, because obviously I think there were a few like immediate lessons in trying to just sort of like redo Bitcoin, so to speak, like the supply curve. I think you know movements in the price and people like getting into the mining itself, and the amount of supply coming onto the market. Like I think there was a realization that like maybe the exact same supply curve wouldn't necessarily work in the exact same way, and maybe the exact same mechanics of the mining itself may not work in the same way. So I'm curious how you kind of thought through some of these things, and maybe what some like early changes or ideas were, to address that, and maybe kind of down the road now, like where you've come to in terms of like what's like a better solution.
Yeah, I mean, there's certainly some path dependency, right? Like, it's not as simple as just rewriting the Bitcoin program and launching it on Solana, and then everything will just play out the same way. It definitely plays out differently. Um, and yeah, in some cases, because of the fact that like you have DeFi, and like it's so easy uh, to trade and sell these tokens, where arguably in the earliest days of Bitcoin, there were no exchanges, so there wasn't even a very obvious way to sell the Bitcoin that you were mining, at the part of the issuance curve where everything was steepest, where inflation was the most extreme. But that, yeah, I mean, that was, I guess, one of the issues. Um, so Aura has gone through quite a few different iterations now. Like, uh, the main goal when we went into V2, was trying to fix that whole like bandwidth bottleneck problem of like our initial goal was to do like real proof of work, and we wanted the actual computation to be the bottleneck and not landing transactions on chain. And so we kind of redesigned the system for V2 around that. But honestly, the V2 system has been so memory holed now because like of all these inflation issues that we discussed in the price action was just so abysmal, because there just weren't that many tokens initially. Uh, like the issuance curve was fixed at like 1 OR per minute, and so if you do the math, like the inflation rate was very, very high, and that had a negative effect on the price. And then additionally, like the real proof of work system, it was very hard to make that consumer friendly like we had wanted to. we tried a bunch of different stuff from like CPU friendly hash functions, like mobile friendly hash functions, trying to keep the system as accessible as possible to as many people as possible. But there's just like uh, a Pareto distribution of skills and resources, and so it was a little bit inevitable that, like, in my opinion anyway, that like the issuance curve became very dominated by just a handful of parties, and um, and the vast majority of people that wanted to get involved in, or like the real believers who saw the grand vision, they weren't able to kind of secure as much of the emissions as these larger miners were, who didn't necessarily, buy into the vision as deeply, but were just there to kind of flip the mining rewards. And that was where it became like very apparent to us that like there's this core value leak in proof of work, and proof of useful work for that matter, where like, it's very obvious in hindsight and very straightforward, but like the miners, they spend electricity, they spend fiat or dollars to buy electricity from their electric code, and then they earn revenue in crypto. And so you just have a balance sheet problem of like they're going to have to sell that crypto back for fiat to continue mining. um, and in the aggregate, basically you can think of it as like all the value or money that miners are spending on electricity, it comes out to the value of the token. And in some ways it's the holders of that token that are paying for the miner's electricity. And for what like Or was trying to be what we all wanted it to be, this sort of structural value leak like in the core emissions mechanism just was kind of, yeah, untenable. It struck us as like a fatal flaw. And I think that was where the community kind of recognized like we eventually have to move off of this proof of work emissions mechanism if we want the project to succeed. We didn't know what we wanted to move to. We just knew that like the current situation couldn't continue. Um, and so that was where we uh, started designing the new, what we call grid mining system, which was the whole idea there was to plug that value leak and essentially, try to make it such that all the money the miners are spending on their, chances to earn the token um, goes back into the value of the token, um, as opposed to leaking out to the ecosystem. And so there's a bunch of different designs we considered, but the 5x5 grid mining system is what we landed on. And yeah, it's performed, I don't know, pretty reasonably well in the last like 8 months or so that it's been live.
I want to highlight, you mentioned useful work in relation, maybe as
Yeah,
contrast to proof of work. I guess, how
sure.
would you differentiate proof of work and proof of useful work, so to speak? Like, what's a core differentiator there for you?
Yeah, well, there's always been this like idea floating around, probably for like a decade or so now, that uh, in Bitcoin, uh, the miners they're just doing like a hash function. The core computation is just a hash function, meaning the output bits, like the output information that the miners are producing, uh, is meaningless. Like it's economically non-valuable. No one's willing to pay for the output of a hash function. Um, but the protocol essentially mints a token to pay for that valueless information. And so there's always been this idea, well, these miners are kind of, in a way, you could argue, wasting electricity, and the protocol is paying for it. So could we perhaps get those miners doing something like producing information that is economically valuable to someone? Um, and these systems have uh, never really worked. The idea has been around a long time. I think there's a few new attempts at it. Uh, yeah, I don't want to speak ill of anyone's project. I'm very skeptical, I guess, of useful work for a few reasons we could get into if you want. but but yeah, that's the core idea, is to try to like, can the miners do useful computation that's economically valuable as opposed to producing meaningless information? Yeah.
I got you. I think maybe just something that pops in my head is that I think if you were doing something that was useful work, I'm not necessarily positive that you would need some sort of token attached to it kind of arbitrarily because you're already doing something that's useful and maybe it could be sold and operated as a business. And I think we see that in practice. So
Yeah,
uh,
yeah, that's exactly the argument, I guess, of why I'm a little bit skeptical of the proof of useful work. Is just that, um, yeah, if you're doing AI inference or something, like there are customers for that,
right.
and they pay for that information. And yeah, I'm not really sure why you need a blockchain to like. And the blockchains here are they're minting a token that verifies zk proof that that computation was done correctly, essentially. And so the miner in this case, they do a little bit of inference, they generate a zk proof, which is extra computation, right, to like validate that they did the computation correctly. The original customer, like Anthropic or AI, they're not paying for that proof. Like they don't care. They have a trust relationship with the data center that they're going to do the computation correctly. These are like, multi-year deals on inference jobs, and the data center is not trying to like cheap out on OpenAI or Anthropic. So, but then you have a blockchain that is essentially minting a token to pay for that zk proof, and that just kind of sits on the side somewhere. That it's not like I don't know. I guess I don't see where it fits in the supply chain of AI inference. Is my main
Yeah.
question.
I think I'm there with you. I think the Bitcoin story kind of it sort of explains itself into existence because it's do this otherwise useless computation, but it's not useless because you get this thing that we've willed into existence and it has value because other people are willing to buy and sell it, and that works out for you. But if you're going to do useful work, there's lots of useful work that you can do and sell as services to businesses. But with that all in mind, obviously you mentioned taking ore in sort of a different direction away from this hard focus on the proof of work problem and trying to overcome that, and landed more on this grid mining solution. I guess let's talk about like kind of the new ore, like the current ore protocol. And I don't know, I guess maybe you can speak a little bit more about how it works. Like I think if I kind of took away the mining aspect of it and just like looked at it as a layman from the side, I would say, wow, this looks like a roulette wheel or like a blackjack table or something along those lines. I don't know if you give it that type of feel, but it from like a simplified perspective, it does feel sort of like a game of chance that people are playing kind of like on repeat.
Yeah, yeah. I mean, you're not wrong for sure. So some of the initial ideas that went into that system was just initially recognizing that uh, in real proof of work, it is also a game of chance, essentially. Like every hash that the miners produce is a lottery ticket that has some probability of winning the block reward. And the miners are, uh, yeah, using as much electricity as possible to try to generate as many tickets and improve their odds. Um, and so that was kind of the core, like, um, there's an economic concept called like a Tollick contest, where like your odds of winning are proportional to your resources expended, and is like we could build an economically uh, identical system. Like it's interchangeable from an economic standpoint, but the implementation details are a little different. Like you're not generating hashes uh, and doing kind of useless computation, and and because of that change in the implementation details, then we could redirect uh, some of those minor expenditures back into the token and reduce the value leak there. So the way the grid mining system works is, is a probabilistic sort of emissions curve where miners prospect for ore on this like grid of squares or grid of tiles, and there's 1 minute rounds, and every round, like based on where you've deployed and how much soul the miners have deployed, you earn a portion of ore, essentially. Is the idea in a nutshell. And the main goal there, right, is like one, to create a more fun emissions mechanism. Like we think really key to this store value idea is like you need really broad distribution, and we find it is like super important that like regular normies feel they can participate in the emissions mechanism, where if the emissions are dominated by like a handful of, I don't know, call it like 12 like public company miners or something, general people feel they can't participate. Like they're kind of locked out of the system. They don't know where to start. And so for buying into that kind of grander non-fiat currency vision, like the participation element is really important. And so that's where I think we've tried to draw this fine line between uh, making it user friendly and consumer accessible without, I don't know, going too far into sort of gamification aspects. And with the V4 system that we are currently designing, it's meant to, we're going to keep the current grid mining sort of mechanism, but refine it a bit, because we do find like a fairly large portion of users come in and either get burned by the current mechanism, where like the probability of loss is just like too high, uh, or they just get too like super caught up on the roulette aspect of it, that they can't see the grander sort of non-fiat store value vision. So we want to address that because it's a fairly big hole in the current like onboarding funnel essentially, and we'd like people to be able to see the grander vision without getting caught up on the yeah, like exact mechanic of what's happening in the grid.
I think that makes sense. Don't want people to get maybe carried away with some of the gamification a little bit. Maybe can you talk to me about, because I know everyone loves to chat now finally about protocol revenues. We want to see businesses that make money on chain now rather than just token go up. Token go up is good, but it's better and it's easier to tell the story when revenue also goes up. And I know Or has had some strong periods here lately. Blockworks, we just recently put out an Or dashboard, so folks can go check that out. But maybe just talk me through the system there around how the protocol earns revenue. I know there's like a buyback system in burn of the token. Like what's the design there, and like what's kind of the intention?
Yeah. So when miners deploy Sol into the grid, um, a portion of that gets returned back to the miners, and then a portion gets collected by the protocol as what we call protocol revenue. And 100% of that protocol revenue gets directed into the buyback system. So is used to buy back Or and bury it or burn the tokens. And in its place, so where the protocol is taking that fee, that's where the protocol then mints that one Or to distribute out to the miners. And so you have this kind of fluctuating balance where sometimes that protocol revenue will be greater than the value of the Or that is minted, and Or goes deflationary. And other times it's the other way around, and Or will be inflationary, just depending on how much those fees are, like if they're buying back more Or than we're emitting on the round. In general, it kind of stays like neutral to slightly net positive. And so miners are participating because they are able to essentially get like a lower production cost on their Or than the current spot price. Um, but that's essentially what is counted as the revenue, is that protocol fee that is collected by the protocol and then directed into the buyback system.
And I guess how do you see that that design sort of aligning with this longer term vision of this decentralized, self custody, non fiat asset? Is it like, do you think that kind of like furthers that purpose, or it ties it together in some way?
We do find it tends to concentrate emissions into the hands of like the real believers and holders. So the folks that are coming in trying to flip really quickly for like $1, um, there's this like, I don't know, tax mechanism you could say that's implemented in the mining, where whenever you claim your mining rewards, you essentially pay a 10% tax to all the miners who have not claimed their mining rewards. And so this is the refining process. For people that are familiar, we call it unrefined Or and refining yield. Um, and so we find that that mechanism like the users are coming in, they're trying to mine for a quick buck, like in Flip that you would see in traditional POW, traditional proof of work, but those miners end up essentially distributing tokens to the holders that like really care and want to hold. Um, and and so on net, we find that like yeah, as long as you have a sufficient percentage of miners that like really care and believe and like really hold the token, that um, it kind of rewards them, and that's why they participate. And and ultimately, I think people self-select into that system, and the miners that are flipping have a harder time kind of getting their profit.
And I guess maybe related to that, the other thought I had is, do you think just the way that the system is designed and kind of throughout the years now, the way that it's evolved, do you think there's some inevitability in the way that the market sort of like learns what the current system is, sort of ends up playing or reacting to that in the most efficient or most reasonable way? And then I don't know, does that serve as sort of a constant forcing function to continue to evolve the exact design or mechanics of the protocol? Or do you think there can be some point where you've got maybe a relatively like idealized system and it can kind of serve itself for indefinitely?
Yeah, well, there is no perpetual motion machine for sure. Like thermodynamics wins, you know. Like, I think it's yeah. Uh, I yeah, I actually have a thermodynamics textbook like sitting on my desk right now for for different reasons, but it's like, but it's still like the same principles still apply, right? Like, the only thing that like, there's no mechanism you can design that like makes a token price go up. Essentially, the only thing that makes token price go up is like net inflows into the asset. And so you need people like to buy into that vision and believe in the asset long term in order for this to succeed at all. And the mining mechanism really is just kind of a way to reward the people that do that and try to filter out as many of the sort of short term like flippers as possible, um, and minimize the leakage from those like short term flippers. That like there isn't value leaking out of the token to some electricity company. So at least the emissions mechanism is like, the idea is to be as net neutral as possible when it comes to like inflation, and reconcentrate tokens into the hands of the people that like really believe in the project and are holding the token. Um, and so those are kind of the two, I guess, main high level goals in terms of like, it's all about token distribution essentially, and just getting to as many hands as possible, and particularly the hands of the people that are holding. Yeah. In a fun way too. That's like a little bit more active than just passive staking, let's say.
Yeah, there's definitely I mean, I can tell that like, there's been an attempt to make it interesting and exciting, which makes sense because, like you mentioned, if it's about getting inflows and getting people excited, then there has to be a reason that they would want to go there in the first place, which I think that follows logically. Maybe then talk to me. You mentioned working on an updated design of the mechanism. Like, talk to me about that. Like, what's the based on what you're thinking now? Like, what do you think kind of the future for Ore protocol looks like in terms of if it's modifications to the design, if it's new types of grid mining or other types of mining that you're thinking about?
Yeah, the V4 will still be grid mining. There's a few cases where yeah, I don't want to reveal too much, but I can just say like there's a particular case where like new miners come in not understanding how the mechanism works, and will sort of get burned. Like they put, say, all their soul on one tile, they lose and get nothing back, and this is like a huge churn moment for users, where users fall out of the onboarding funnel. And so we're kind of really focusing on that moment, and how to avoid that as much as possible. Yeah, where like as long as you're participating, like there isn't a case, right, where if you join a Bitcoin miner pool, like you don't you always earn rewards. Like you always earn Bitcoin eventually. Uh, and so we want to get a little bit closer to that, as opposed to sort of a really high risk uh, yeah, like roulette style wheel.
Gotcha. So maybe taking away some all or nothing outcomes and having more, at least something outcomes for users. Okay, I think that makes sense. But specifically to that point, like that, I think that's a really interesting comparison. The idea that if you think about Bitcoin mining as an example, then you're completely right. It's like you have some amount at stake, and at worst, you'll get nothing, but you don't lose necessarily what you have today. And at best, maybe you hit a block by yourself by pure luck, and you get, in Or's case, the mother loader, but in Bitcoin's case, a couple of BTC. Um, and how do you think now? So, like, maybe getting back to the question of being on top of Solana, like how well has the Solana ecosystem and maybe like the Solana sort of trader mentality or like average user base of Solana, which has kind of classically or historically was like very meme coin, like degen spot trading focused. That activity's maybe declined a little bit, but I don't know. Do you think that like past and people's focus there on meme coin trading has lended itself well to being like good target audience for interacting with something like or are they like completely different? Like you got to teach someone who does memes about or.
Yeah, I think it's a different audience. I mean, the average or holder, I couldn't give you the exact, time duration, but there are people, right, like a fairly large number of people that have been in that Discord and designing these systems. Because all these ideas are like not mine either. Like I contribute maybe one out of every five ideas that makes it into the protocol. Like most of the ideas come from the community, and they've been in there for like 2 years now, largely, or one and a half for many of them, and so I think the participation time and I guess time preference is just like much longer in the OR system, and OR community has a lot of kind of old school like Bitcoin OG folks that um, I think we all kind of took a step back together and were like, if we have some greenfield opportunity to like redesign this asset from scratch, like how would we do it? What would it look like for us? And there's some properties that like we think you should keep, like the fixed supply, programmatic issuance curve, open source, of course, like immutable code. Um, but then there's other things we would change, like Bitcoin is a non-productive asset. You don't have yield, and that's kind of a relatively big deal. And the mining system, like regular users can't participate in, and then like it's just really hard to transact in the Bitcoin networks. Like how do we make that cheaper and easier? And Solana is kind of the answer to that. Uh, and and so yeah, I think the OR community itself is much more longer term oriented, and we definitely have like some of the I don't know what I might call like core Solana uh, I don't know, demographic in there, but a lot of folks actually came into or like they weren't even in crypto prior, or they were in old school Bitcoin and hadn't really done much in the outside of I don't know, crypto ecosystem outside of Bitcoin. Um, and so it's a little bit of a different demographic for sure. Yeah.
Maybe I'll flip it around. Like, do you think does that present maybe like a challenge a little bit in finding, if the some of this demographic that's interested or becoming interested in or is maybe not even crypto motivated in the first place? Does it make it harder to expand that community and that crowd because they're maybe not someone you would pick out of like, an on-chain Solana native lineup maybe at first glance?
Yeah, I think the thing that holds them all together is that they buy into that like original vision. I don't know, what we might call like Satoshi's vision or something, of like scaling self custody and being able to transact like peer to peer and DeFi. Like a lot of them, we all really buy into decentralized finance and open source, mutable smart contracts, and um, yeah, we think these things like really matter. Uh, and I think that like those values kind of I think they transcend like there is demand out there for like for that from people that are not in the crypto ecosystem currently, but like buy into that vision. If you only give them like the onboarding channel and like the ability to and the asset to. But the problem is like setting up a Bitcoin wallet is very, very hard. And transacting on Bitcoin, like the actual network Bitcoin, like takes these 10-minute settlement times, and it's just this is very clunky thing. Um, and so yeah, I don't know. I do firmly believe like the market for those original like I don't know, Satoshi uh, style values is quite large, um, if they can only be realized, and it's sort of making them material and realizable. That's the hard thing actually.
Maybe going in a different tangent here. What do you think about some of the? I know there's been some different like or forks at this point on Solana, and I don't know the kind of future goal of or. I don't know if it's to become much bigger and you have like maybe a variety of different mining, methods or different sort of like products that fall within this ecosystem, or if it's more simple than that. And I don't know, just curious thoughts on forks. Like, are they interesting? Is it cool that people are kind of messing around and tweaking these other different designs of like how you might do like a Bitcoin, mining protocol on top of Solana in a different way?
Yeah, I mean, I think it's been beneficial in the sense that like they have been able to reach audiences that for one reason or another just did not like uh, talk about OR, and so that grows the conversation, and I think is like been actually net beneficial to OR. Um, and then secondly, like it has put a little bit of a fire under us where like um, many of the forks were rugging. So this is like kind of been a recurring problem over the last 2 years, or probably had 2 dozen forks or more at this point, and like a lot of them turned out to be rugs. And we noticed that like many of them were kind of using Or's brand to like pitch this idea of security. And they would even say lock liquidity and like Meteora, which would look safe. But then like the developer, right, like would still have the mint authority over the token. And so, you'd arguably have users had less security in those systems than they would in like a pump fund coin where the dev doesn't have mint access. And that really like got us yeah, I mean, that pushed us like to accelerate our timeline in terms of like freezing things, and so we were able to take out like certain parts of the OR protocol, break them out into new programs, new smart contracts, um, and freeze those parts that we were really certain like we're not going to change. And so in particular, we took the core mint authority over the token, pulled that out into a new contract, and implemented just very simple constraints like never mint more than 3 million tokens and never mint more than two or at a time. And so now the holders of that token, like there's no counterparty risk on like with myself, for example, like if I'm a on the multi-sig that controls the upgrade authority over the mining contracts, like the community still has the ability to kind of fine tune the mining rules and the mining game within the constraints of we can never mint more than two per minute and we can never mint more than 3 million. Um, and so we were able to secure parts, and then we did the same thing with the staking program. So the staking program secures, I think, like 270,000 or something like that. I don't know, depending on the price, it might be somewhere tens of millions, basically, of dollars. And and so we froze that program just to remove like the counterparty risk on the upgrade authority. So it's really just open source, immutable code, and users are securing their funds with their keys. And even if like my keys could be compromised in some sort of social attack, like those users are safe. They're immune from any of that. And so yeah, that has been probably the biggest impact on the org system of the forks, is that it's driven us to freeze more parts of the contract because we realized that like that was I don't know, a big risk to the users that were participating in those systems, and we felt that we sort of needed to set like a higher standard, I guess, um, assuming that more forks are going to come.
Yeah, I think that makes sense. It's I don't know, it reminds me of the kind of the parallel that we're seeing with protocols that are raising on chain now, and like the movement that MetaDAO has sort of had with having a certain kind of income and allowance there in a treasury that's not necessarily in the control of the team, just out of a propensity to mitigate risk, so to speak, or counterparty risk there. I think it's interesting you call that out as like maybe one of the other biggest like hurdles or things to address for ore. I guess if we compare to the classic Bitcoin case, I think a lot of people regarded Satoshi obviously had a lot of coins, but there's been this longstanding belief that he's either not around or just wrote it off or disappeared, died, whatever it is. And so that's sort of that like original developer kind of risk and big hoard were out of the question. I don't know. Is there obviously this gets into the question of like putting things behind smart contracts and maybe locking those down to some extent, and how much you can have like immutable code that never changes and that like secures parts of the protocol. How difficult is it to weigh between parts of things where you think maybe at some point in the future it would maybe make sense to modify or tweak the design versus we should lock this down because there's concerns that if we don't, minting gets out of control and the thing collapses?
Yeah, it's a little bit difficult. It's been an ongoing conversation, I think, with your community as to like what are those uh, properties that like really should be immutable, versus what are the ones where the market changes, users have ideas that come along, and we want to implement them. But if the contract is frozen, then we won't be able to. And at a technical level, like doing that, freezing certain parts while still allowing flexibility over other parts is like kind of been an interesting challenge from on a smart contract design standpoint. Um, but I think we've done a pretty good job of like atomizing and uh, I don't know, yeah, just breaking out the very specific pieces like the mint authority and the supply constraints. So it's like the supply uh, the supply curve, right? Like we could later, we still have flexibility to implement some sort of decayed emissions, or like call it halving or something. Like I don't think we're going to do a halving. That's quite extreme, but like that still fits within the constraints, because the constraints are like max 2 tokens per minute is like and there's no lower limit on it. So and there's an upper limit on max supply of 3 million. There's no lower limit on sort of how many tokens could be burned, let's say, other than zero. And so yeah, we try to give ourselves like some flexibility with those constraints, but also just like how do we provide the guarantees that the users want. And so the two most important pieces were securing the stake and securing the mint authority. And I think there'll probably be one or two others um, that we freeze as well, like in the coming months. But for the most part, the community, I think, is like wanted to retain flexibility to upgrade the core like mining mechanics, because I don't know. Well, you just have lots of ideas and they get thrown around a lot, and it's just a much more like fluid system. Um, and you could imagine, or in the future, moving to some totally different like mining mechanism that still fits within the supply constraints. Um, at some point in the future. We don't have anything planned at the moment, I want to be clear, but like like that flexibility exists if users decide like, oh, we actually want to mine through, I don't know, or some other mechanism than the current grid mining system.
Yeah, I think that makes sense. It sounds pretty elegant in the sense that maybe again taking Bitcoin as sort of an example here, where really, if I think if you get kind of down to the nuts and bolts of it, it's like there's a certain fixed emission schedule of the token, and it decreases by a certain amount every amount of time periods. And in this case, you don't have some decreasing emission schedule, but you have fixed constraints around maybe what an emission schedule can look like, and so
Yeah,
then you can kind of
exactly.
redefine different schemes that fit into that mold. But they could change and they could be non-fixed, so to speak, which is interesting.
I mean, the core idea, like, the way we're trying to describe it right now is like future proofing, like just anything that could pose a risk in the future, we want to address. And so that involves like supply curve stuff. We want to future proof the supply curve against future decisions, future proof the stake. Like we just rolled out a little quantum safe multi-sig for users if they want to secure their OR assets with like a quantum resistant key pair. Yeah, anything that is potentially a risk in the future, we feel that like future proof is kind of the core property that you should measure a SOV by. And so that's like what defines it almost. So that's kind of what defines the roadmap, is like what are the anxieties people have about the future.
I think that's pretty interesting to me. How critically do you view, or maybe the community, from your estimation, like do they view the quantum threat? Because I think that's an area where we've seen there's a lot of discussion there in relation to Bitcoin. It's obviously a much larger asset. They're going to move slower. Naturally, we know how that works. But I think sort of yet to see like real movement. I'd say there's a lot of talk in that area. But I think maybe broad strokes, it sounds like generally speaking, a lot of people would say, oh, quantum is a while away. Like we've got time to figure it out. I'm curious, like your view there. Do you think that's true, or do you think it's more of a just fix it now?
Yeah, I'm not super deep in the weeds on like the current state of quantum computing, but my general, they are very real. Like it's a very real technology. And I personally would like not bet against a rapidly advancing technology. And it's like not bet against exponentials. um, and so yeah, I think that Solana, really needs to investigate sort of how we're going to transition and to like a post quantum signature scheme. Um, and there's little things we could do right now. Like the work that we did was built on top of work that the Solana developer Dean Little had put out, who works at Blue Shift, where he had built the core sort of multi-sig infrastructure, and then we adapted it and for OR in particular. But I think there's still a question around like how do we secure consensus with like a new key pair scheme. And those, I'm sure, are conversations that are going on at like Onza and Foundation and elsewhere. But I felt in the same way maybe that OR helped kick off like the IBRL, like I'd like to also kick off the whole quantum discussion and just get more people talking about it.
Yeah, I think that's totally fair. Especially, I don't know, when we are dealing with all these now very large kind of financial systems and large amounts of assets that are secured really just by cryptographic key pairs. It feels pretty meaningful to like future proof that one potential kind of world shattering issue that may come along. Maybe sooner than later, maybe much further along than anyone anticipates. But to your point, AI is getting very smart, and we're seeing the progress there. Maybe it might not even be a human that figures out exactly how to build a quantum machine, so to speak.
Yeah, but the other way I look at it too is like in general, I think you could frame it as users are just asking for alternative cryptographic schemes. Like ultimately, crypto is about securing your money with cryptography. And Solana right now offers a product where you can secure your funds with elliptic curve key pairs. And users are asking, well, I want to use Falcon 512 key pair. So like, why can't I? And so like we should be able to offer that product too. And there's no like fundamental reason why we shouldn't be able to. And whether or not like that concern is grounded in real technological development or not, it's just like it's demand that users have, and so we can serve it. And I think serving it is a lot better than kind of sticking our head in the sand and saying like, oh, this isn't an issue, don't worry about it. Yeah.
Yeah, I think that makes a lot of sense. I mean, maybe to close out the conversation on future proofing, obviously, from what I understand, OR is no longer taking down the Solana network or anywhere close to it. We're away from those issues from the proof of work days. But I guess, is there anything else like maybe outside of the wallet or the quantum issues for Solana the network and being a protocol that operates on top of it that you see as sort of critical for kind of future proofing against whether it's demand of usage on top of Solana or anything else that you think that is sort of should be top of mind that maybe is or isn't?
Yeah, I mean, I care a lot about the whole stake distribution and geographic distribution. I think is quite important. Is what distinguishes Solana. Solana, in my mind, is like the only chain pushing the envelope on performance at scale. Um, Certainly, you have other networks that uh, might have really good products, but like in terms of self custody and you know scaling self custody, I'm not sure that 20 nodes in the same data center all run by the same team is like really doing much to scale self custody. Like that seems like an issue to me. Um, so I yeah, I do care a lot about stake distribution, and I'm sure at some point here in the future, like the core or team will want to run a Solana validator node. We don't currently, but I'd like to participate at a deeper level in the Solana network. Um, and yeah, anything we can do there to, I think, you know, to help secure just the consensus layer at Solana and avoid um, consolidation in the long term. Like one issue Bitcoin has had, right, just like the halvings dramatically increase like hash power consolidation. And I think proof of stake networks, they naturally lead to stake consolidation over time, just through like a uh, yeah, like the sort of Matthew effect kind of thing. Like the folks who have the most stake get the most yield. Um, and so there's already a little bit of a stake consolidation problem. Is sort of how do we avoid that um, sort of accelerating or becoming too big of an issue in the future. Yeah.
Yeah, totally fair point. I think, I mean, this is one that I would say, like folks who are very deep into the maybe self custody and decentralization ethos come back to this conversation a lot in terms of how much distribution is enough in terms of how many boxes are run in AWS versus at home or in various places around the world. And I think we'll probably continually bounce around in between different places along that spectrum going into the future.
To be clear, I definitely don't believe in the idea of like the toaster network. Like I don't think I think we want to run on like the most performant machines we can. I think it's just important that like we have a lot of like yeah parties with vested interests and like trying to secure that thing. And if they're large, like they're large, but we just want many people doing it.
Yeah, yeah, and I think that makes sense. Maybe just to close things out, can you give any final words or thoughts on where Ore's headed? Maybe over the next couple weeks to months. You mentioned you guys are working on some changes and updates to things. Maybe you can't give full details, but what should folks be looking forward to coming out of Ore here soon?
Yeah. I mean, the biggest technology changes coming are the V4 system, and then we are doing a lot sort of on the non-tech side to spin up an OR foundation that will sort of separate things from the labs entity. Still be like a nonprofit entity that will largely take on like the marketing functions and growth and objectives of OR, and then the labs entity like is kind of investigating more and more like how do we grow and bootstrap like a liquidity network around OR? Like I think spot trading is obviously where Solana dominates, and the thing that like defines a currency in large part is like it's a medium of exchange. There's like high liquidity. The dollar arguably has infinite liquidity. You can exchange it for anything, televisions and cars and so on, and so or just needs more liquidity. And so I think we're probably on the lab side of things, like going to investigate getting more involved in like active market making on chain, and trying to bootstrap more liquidity there for like important pairs. Um, and but yeah, that's all kind of coming probably over the next like many months. It'll take a little bit of time to spin that up.
Awesome, love to hear it. I know I was initially interested maybe 8 or 10 months ago. I can't even remember the specific time now, but when I know, or being a smaller asset on chain, obviously not having sex listings and things like that, I thought it was interesting when some of the prop AMMs started quoting the token for initially, whenever that was, kind of along that trend that you mentioned. Spot trading is really like taking over on Solana. So it was interesting to see Or be a part of that story.
Yeah. Yeah.
Awesome. Well, Hardhat Chad, Foreman, it was a pleasure having you on today. I've been like I mentioned, long time follower of things going on at Or. Maybe not totally deep into the Discord and those deeper conversations, but at least familiar and mined some Or initially myself back in those early crazy days. So I know about some of the trials and tribulations that you guys went through, and glad to see you still kicking and finding like new life and new designs for the protocol, and excited to see kind of what you bring forward with Or going forward. And we'll just keep mining and we'll see what happens.
Yeah, I appreciate it. Thanks for having me on, Danny. It's been great.
Yeah. Thanks again so much. And to the listeners out there, we will catch you next time.